In today's weekly Forex forecast, we're talking about the DXY, the Euro, the Pound, the Dollar Yen, and also the Dollar Swiss Franc. So for the most part, guys, markets have been relatively sideways still, dealing with just a lot of chop out there. Starting with the DXY, which for the most part this week has been sideways following that retest up there at 101.8. So we've talked about all this before in previous videos, including last weekend. You can see back here, if I go all the way out to these highs, okay, so from right back here, from last year, we've got these highs right around 101.8. We've also got these lows through here. So this was bound to be a key resistance for the DXY, and that's exactly what we've seen here so far. Furthermore, you've got this descending channel here off of these highs that we've also talked about coming in at that same level. Okay, so 101.8 was a significant retest for the DXY, so no surprise that we are seeing a pullback here this week. Now, this down here, we also talked about this, how this right here was technically a failed breakdown below the bottom of this channel. Okay, so in the previous videos, what we talked about was this close back above this channel. Okay, so you can see here that we did get the sustained break below, okay, through here. We had this kind of rounded bottom that formed, almost an inverse head and shoulders. We then had the close back above here, and this is where I was talking about that potential for the move back here toward 101.8. And the reason for that was this candle back here, which was an imbalance for the DXY, which was also filled here. Okay, so that's kind of the backstory on where we've been for the DXY, why we've been seeing what we've seen here over the past few weeks with this rally. Now, again, markets remain relatively sideways. I think this is what this is going to come down to, at least for me, is seeing the DXY get back above 101.8. If this market is going to rally, if we take a look here at the weekly time frame, right, we do have the potential for this down here to become a failed breakdown. So very similar to what we got up here for the DXY off of these highs, you had this move above these highs, right? Swept the liquidity, also filled the imbalance from back here. Notice this was something I talked about for over a year, guys. This imbalance back here on the weekly was filled over here around 109 for the DXY. Now, one thing I want to draw your attention to is if we take a look at the monthly chart, right? You've got this imbalance, or you had this imbalance down here as well. So I want to draw your attention to these two highs right here on these monthly candles. So these were both imbalances because there was no retest through this area, right? So on this move up, there was no retest through here, which meant this was an imbalance for the DXY on the monthly. And what you'll notice is that last month's candle in April, we did get that fill of the area below 99, okay? So this filled that imbalance from back here, very similar to the fact or the way that the DXY filled the imbalance up here around 109, okay? So these imbalances on the high time frames do tend to serve as magnets. And furthermore, when you get that fill, you also tend to get a move in the opposite direction. So with regard to the DXY, if the market is going to bounce, significantly, then this could be the area that it starts to materialize. Now, one thing that we have to see though, is the DXY get above 101.8, like I've said. However, with that said, if you look back here at these lows in the weekly, okay, this right through here on these lows, the fact that the DXY is now trading back above them on a weekly closing basis is significant to me because it shows that this down here was a failed breakdown from the DXY. Typically, when you see that, you do get an extended move in the opposite direction. Another thing that really stands out here, okay, is that during this pullback for the DXY, you have candles up here like this. And we talk about imbalances, right? We just talked about those imbalances on the monthly and also the weekly. And you've got the same thing here on the weekly up here at this low. Okay, now obviously that's a long way away from where the DXY is right now, right around 101. So, this up here around 106, I mean, that's a long ways away from where we are right now, but that could become a target in the coming weeks if the DXY can break above 101.8. Because so far, like I said, it is trading above these lows from back here. So right around 100, it is doing that. That is a bullish factor. And if it can then reclaim areas like 101.8, then we have that bullish trigger, okay, getting above here to break out from this descending channel following that failed breakdown, right? And then again, this is your imbalance up here that we could target, okay? So that's kind of the bullish scenario for the DXY. Now, of course, we have to entertain the opposite side of that, especially with how sideways markets are right now. So if the DXY can't get above this area here, then we're looking at 100.2. So like I've said in recent videos, guys, the only way that the US dollar becomes bearish from here, at least longer term, is if it closes back below 100.2, because this through here was a significant resistance for the DXY through this period. We got the close above new resistance, or I'm sorry, new support through here. So the only way that the DXY becomes bearish is if it closes back below here. If it does that, then this up here is a failed breakout, and we're looking at a sweep of this low. Okay, but again, if it does break above 101.8 in the coming days, then we do have that potential for the push higher up here towards some of these resistance areas, including things like this back here too, guys. Don't forget that we also have an unfilled gap over here. Okay, so 103.66 or so, this right here is also an unfilled gap that could become a magnet. Okay, this right here, you've got the imbalance up here at 106. So there are some factors here that could become magnets if we do see that bullish breakout. All right, so it's certainly something we have to entertain here if the DXY can get above 101.8. So we'll see what we get, going into next week, guys. I mean, still very indecisive, but we'll see what we get over the coming days. Now, looking next at the EURUSD, and by the way, guys, if you are enjoying this content, do me a favor. I spend about 3 hours every Friday working on these weekly forecasts, and it takes 2 seconds to like the video and a few more seconds to subscribe. So go ahead and do that right now. I really appreciate it. Looking at the EURUSD, guys, we have the market rotating lower from that 112 resistance area that I've talked about recently. So this is something I mentioned in recent videos where you can see that the pair did break this trend line here going back to March. Okay, so we had this low down here. We've got these lows through this area, and we had the EURUSD break below it. Look what got retested on the very next candle. So that was a potential sell right there on that candle that I talked about in recent videos. You also got these lows through here too to add some confluence to that breakdown. Now, looking at the EURUSD on the weekly time frame, I think this is really telling for this pair because just like with the DXY, right, it's essentially the inverse of that. You have these highs back here on the weekly, right? And this up here could become a failed breakout if the euro closes below 112 today, because this is a weekly close. Now, it does look like we're going to get that considering the weakness we've seen here over the past few hours. And this would be very similar to what we got back here, although the inverse of it. So you essentially have these lows back here, and we saw the EURUSD close back above this, and we saw that move in the opposite direction. This is what I mean. You get this move below lows like this, the reclaim and the rally. So in this case, if the euro can't hold above these highs, then this up here becomes your failed breakout, and we could start to target some of these imbalances down here, in the mid-range of this previous range, okay? So that could be a bearish factor right there setting up for next week if we do see the EURUSD close below 112, which again, it looks like we should get, considering the fact that, for a while there, it was hovering right around this area, but you can see these upper wicks on these previous candles, right? Pin bar here, 50% fill of that wick, and then the pullback, okay? So, textbook stuff there from this bearish pin bar. So that right there was telling you, that the market was likely to pull back here because it was respecting this area as new resistance following that Monday breakdown. So one thing too, you'll notice that happened this week is we got a gap fill up here from that weekend gap. So if we look at something like the 1 hour time frame, right? So this move up here, you can see this was the close from last week. All right, so we had the close from last week. Monday opened, it did not fill that gap. And this rally so far this week did fill that gap. Okay, so it came up here and it filled this gap right back here. And then we got that push lower. Okay, so really that's all that was, during that rally this week. So hopefully you guys, caught that and you saw this gap back here and did not get faked out from that. So anyway, from here, guys, the weekly time frame, I think, again, really shows it all here for the euro. I mean, the market's been range bound for years. We did get the sweep below the lows, right, to grab that liquidity. We got, obviously, that very aggressive rally. And so far, it does kind of look like we could get that confirmed fake out to the upside here, the buy side fake out for that push down here into some support. So some key levels to keep an eye on in the week ahead, guys, are going to be 112. Obviously, this is going to be resistance up here. You've also got these lows, or this recent low here and these recent highs right around 110.60. Below that, you've got this area around 109.30. Okay, so these are all going to be areas to watch here in the week ahead. Obviously, get below this low here, you're looking at 109.30, and then get below that, you're looking at these lows down here around 107.30. Now, if we do see the DXY head up there toward 106 like we talked about, okay, then we could see the euro actually come back here. And I know it seems far-fetched right now, but don't rule anything out with these markets, is you got this area back here that was never tested following the breakout. So very aggressive breakout, very impulsive move. We saw a retrace here into this pocket back here, and you can see a relatively shallow retrace following that breakout. we never got a retest down here, okay? So there is a massive imbalance for the euro down here below 107.30. So do not rule this out. Again, I know this is, relatively speculative considering how sideways markets have been recently, but this down here below 107.30 is something that could be tested in the coming days and weeks if we do get that continuation next week. Okay, now alternatively, if we do see the euro start to reclaim areas like this next week, so closing below it this week and then reclaiming it next week, trading back up here within this range, then that of course would be bullish for the euro, targeting that area around 115. But so far, it does look like we are getting some weakness here for the euro, and that could carry into next week. However, just keep in mind, markets have been relatively range bound, so don't expect markets to just all of a sudden continue, trending lower aggressively. If the market is going to trend lower here, it could be a stair-step pattern over the next few weeks. All right, so GBPUSD, guys, the pound, we talked about this one recently as well. And the price action here does look relatively constructive, a lot more so than the euro. And you can see that compared to this drop back here. So first of all, we know that 134.40 is a significant level based on this high back here, right? So this drop was 1,300 pips from the pound. And so anytime you see a high like this that really sticks out, that's going to be a significant area. And sure enough, it has been. However, if you look at this drop back here, okay, very aggressive following that retest. And this time it's been very different, right? We've gotten kind of this choppy price action, trending lower down here following this impulsive move. Okay, so on the one hand, and this is where I kind of go back and forth because markets are so sideways, we can talk about a bullish dollar and a bearish euro and all of this stuff, all we want, but at the same time, markets are sideways. They haven't fully confirmed these ideas yet. And then you have the pound, which is showing, relative strength because you have this impulsive move back here. And then you have this very gradual pullback, right? Very different from what we saw before when we got that 1,300 pip drop. So this kind of leads me to believe that this could potentially be a bull flag, which would be a bullish continuation pattern. However, the key here for this market, like we talked about yesterday, is the pound has to get above the top of this channel over here. It's got to get above this on the high time frames to really confirm the breakout. Furthermore, it really has to reclaim or break above this 134.40 area. Because until that happens, you have the market trading below resistance. You also have these lower highs and lower lows. So trying to buy the market is obviously risky. And plus, guys, this market has been so sideways here over the past few weeks that trying to trade this right here is just, asking for trouble, in my opinion. So you've got all of that kind of going against you right now. But the market is looking, relatively constructive here following that recent move up. Okay. So for the pound, we have the potential for a deeper retrace that we can't rule out while the market's below resistance, right? We have that potential for the move down here for a couple of reasons. First of all, there are imbalances down here right around 130.50. And also, if we did get something like this, that could give us that dollar strength that we were just talking about. And furthermore, too, if you look at the fibs here from this recent move, like the 50% comes in, down here, which this is a key level on the high time frame. So it's also the bottom of this channel. So I'm not ruling out a deeper retrace on the pound before we get that balance. But I do think if we were to get a push into this area, I think that could be a potential buy. I'm not saying it will happen, but if it does, I think that buyers are absolutely going to try to defend the 130.50 area. Okay, and you can really see it back here. Like this is the pivot I'm referring to here, where you've got this high, you've got these lows through here, these highs, and obviously this candle, this wick moves quite a bit above that, but that is still resistance. Okay, so this is the area down here that could come into play if we do get that push lower. But so far, the jury is out here for the pound because it's just absolutely sideways. Now, one thing too I talked about that I do want to cover here before we move on is if we look at the, let's say, 4-hour time frame, okay, you can see that this week we did get this push below areas like this down here. So right around 132, right, you can see that we've got these lows back here. You can see we got that push below and the aggressive rally back above. So technically this down here was also a failed breakdown from the pound, and that could become significant over the coming days because if the pound can hold above here and show strength and then bounce from here and, come up here and take out the top of this channel, then of course that would negate that deeper pullback that we talked about. Okay. So there are a few different factors here, guys, and it's all stuff we have to weigh out. We can't just, assume that we know what's going to happen because the fact is nobody knows where any market is going to go. We have to just play the probabilities and also respect what's on the chart. Okay. So those are a few scenarios to keep an eye on, but ultimately, guys, it is a sideways market. We have that potential for a deeper retrace while below resistance. The pound ideally has to take out the top of this channel and also that 134.40 area in order to expose higher targets. Now, one last thing before we move on, guys, is where could the market target if we do see that breakout? Let's go to a 3-day time frame just so that it's a little bit clearer. And you can see that back here, these highs, this is what I would target if we do get that breakout. So right around 136.30, also 137.50. All right. So again, though, we do have that potential for the deeper retrace while the pound is below resistance. Okay, so the dollar yen, guys, I'm going to try to go a little bit faster here through the last couple because this video is getting pretty long. But there is a lot to cover. Even though markets are sideways, there's still a lot to talk about just because we have different scenarios to weigh out. So looking at the dollar yen here, you have the market holding above this area right around 145.40. So this right here is key support now for the dollar yen. You can see we are getting a little bit of a bullish pin bar here on Friday, although again, it is Friday, so we're getting a little bit lower volume today. So it's something to be mindful of. But really, I think that for the dollar yen and really any yen pair, if you're trading the yen right now, I think that the chart to watch is really the yen basket of currencies, which, let's call it the yen index to keep things consistent. But this weekly time frame from the yen index is, in my opinion, the one to watch because you have this trend line going back to 2020. Okay, this is a massive trend line. And you can see, almost a touch through here, but you've got this high right over here. You've got this high through here. You have a lot of closing prices in this area, and now you have the market respecting this as new support. So the way that this is going to affect the yen is obviously being the yen index, this is going to move inversely to a lot of those yen pairs. So if you are trading the euro yen, right, and you see this market respect this level and rally from here following the breakout, right? This was the breakout back here. If this, if the yen continues to rally, then pairs like the euro yen, the pound yen, etc., could start to struggle. Okay, so we have to respect the breakout right now as long as the market is above this. And you can see how clean this is. Look at the weekly time frame. You've got resistance back here, right, on this high. You have resistance through here on these weekly closing prices, and then support so far, okay? So we can't just assume that this is going to fail. And I love to trade failed breaks, but we have to go with what's on the chart, not what we want to happen. And so when you look at this here on the daily, you did see a dip below it, but the key here is that this is not being respected on the daily. So this back here, you can see this is not being respected on the daily once again through here. So really, the weekly time frame with regard to the yen index is where we live. Okay, this is what we have to look at because this is what's being respected. Okay, and that's really key. It's something a lot of traders overlook, but it's absolutely key if you are going to be successful in this business. So looking here, if the yen were to close below here on the weekly, okay, whether it be this week or next week, if we get a close back down here, this up here, guys, becomes a failed breakout, and we get that push lower down here into some of these lows, okay? That is my ideal scenario because I know that if we get that, it's a very high probability move, okay? It's not to say that it's high probability right now, but if we get it, I know that that is a high probability scenario. So for now, though, again, the market is above this support area, okay? And the reason that this is going to be significant for something like the dollar yen is because if we see the DXY strengthen and something like the yen index start to fail here and trend lower, then we know that we could have a very bullish dollar yen on our hands, okay? So you don't want to trade. If the yen is failing here, guys, then you don't want to be buying the yen, period. You don't want to be longing the yen in really anything, okay? So that's really the key takeaway here with this chart. Now, as far as the dollar yen goes, if the dollar yen can stay above here, okay, going into next week, then we've got this area up here that could come into play right around 148.70. All right, so really nice levels here for the dollar yen. You've got support down here, resistance up here, above that 150.124 or so. So it's a level by level market. And what I mean by that is that as long as we're above this level down here, you've got to respect that as support, resistance up here. If we get above here on the high time frames, resistance up here. Get above that, resistance up here. You get the idea. So it's essentially just level by level, but respecting what's on the chart right now, we do have the dollar yen holding above this 145.40 area. And last up, guys, the dollar versus the Swiss franc. This is another one too, just like the euro. It's a very clean chart, but we still need to see a little bit more here from the market to really have high conviction behind, a trade, potentially on the high time frames. Because when you look at the weekly, and we've talked about this before, but you can see here that on the weekly time frame, going back to 2023, this was a massive range that built up here for this pair. Okay, and if you've watched recent videos, you knew all about this because we talked about when the market was coming up here. In fact, we even talked about how this was a little bit of a fake out here that gave us that clue that we were going to get the pullback. Now, as for the last few weeks, we have seen this market start to claw its way back above this high from back here. Okay, so that is significant because that was the 2023 low. So the fact that we are seeing the dollar franc above that, right around 83.30 that I talked about in the last video, what I talked about there was we had some of these higher lows, right, coming into 83.30, hinting at the potential for a breakout. And we did get that right back to this key level around 84.75. Now, the market's trading above this low back here, so that is a bullish factor. However, you've got these lows back here around 84. And if we go to the daily time frame, right, this is the part that I'm waiting for the weekly close for, because I want to see, can bulls close the market above 84, okay, through here, or do we close below? And again, this is a case where the daily time frame, guys, really doesn't show it well. The daily time frame, I mean, the market's just chopping around this area, so it doesn't really show, it's significant very well. But again, you go to the weekly and you can see that this back here is absolutely the one to reclaim, okay? So you can see how close it is right now in the weekly. If the market can close convincingly up here, then I think we have something going into next week. If it closes right at 84 or just below or even just above, it's going to be too close to call. I want to see something very convincing, but I do think that 84 is going to be the level to watch into this week's close, because that could give us clues for next week. Now, we could absolutely get a close below here this week. Okay, so let's say that this week closes below, and then we get a push down here to fill in this gap, which was not filled, and then we get that push higher. That could absolutely happen, okay? But the point here is that I need something convincing above 84 to really tell me that this down here is a fake out and get that push up here into imbalances like these lows back here, okay? So the potential is there, guys, for some significant moves here over the coming weeks, but we're just kind of on the cusp of getting the price action that we need to really confirm those moves. So I think that's the key takeaway here from this video, that the price action is sideways for the most part, but we do have some really clean key levels out there that could give us some hints as to where these markets are likely to go over the coming weeks. So subscribe to the channel, guys. Keep it locked in here for more videos just like this, and also trading lessons throughout the week. Have a great weekend, and I will talk to you guys again next week.